and share my screen. So yeah, we at Zenith just rolled out a new bridge loan program and cash buyer program, which is really exciting because it's something that someone joining, something that we were missing, in our tool belt. And, in this market right now, there's enough reasons why someone who owns a home already and wants to move maybe is not doing anything, right? Because they have a great rate. They're like, they want to move, but they're feeling a little bit locked up. And then, you combine that with the fact that they are going to be, maybe a contingent offer for most people, all their equities in their home. So we have this new bridge loan program and a couple different variations of a cash buyer program. We did have a cash buyer program last year through a company called Revive. And it was it worked, during that time period where really that was really needed. It worked, people did it, but the fees, turns out were pretty high compared to this one, almost double. And it was only for people who were going to be putting down 20%. So it really kept a lot of the buyers out of the equation. So let me go ahead and share my screen here, and we'll get into the presentation. So I'll keep it as quick as possible, and then we'll just maybe do some questions at the end. All right, so who is this for? This is right for everyone who wants to either buy a house and is having a hard time getting an offer accepted, or someone who has a home to sell and doesn't want to move twice, doesn't needs the equity. I used this past month for a client who they're retired, so the income is they're on fixed income. They have a ton of equity in their house, and they were going to look to downsize, but it just didn't work to qualify for both mortgage payments based on their income. So this was able to help them buy this new home and then sell the old one after. So if you have any clients who are just nervous about even starting to have the conversation right now because they know, maybe they've heard it's hard to get an offer accepted if you have a home to sell, moving twice is not on their radar. And so in situations like that, a lot of clients just end up doing nothing. And so this hopefully will provide a solution for some of them. So benefits for the clients, obviously spend less time shopping. Hopefully when their very first choice home, last year when it was even more aggressive, even though I feel like it's getting pretty, we had some clients go under contract this week and they had to bid up almost 15% to be the winning offer. So similar to what we were seeing last year. And, in perhaps they can even end up paying less for the home, right? If they're a cash buyer. I used to say this last year all the time where it's like, it's challenging if you're a buyer, right? You're paying top dollar covering appraisal gaps, and you're doing that in order to get your offer accepted on your 27th choice house. So that's frustrating. So hopefully this can help them, maybe if it's not their first home, get their second home accepted, offer accepted. So as far as agents, the benefits for the agents, obviously a shorter time frame between when they want to do something and when they actually get something accepted. So that's going to lead to lower stress for clients. Again, getting probably their first or second choice home under contract instead of their 9th or 10th choice home. And hopefully that great experience will just generate more referrals. So the number one program, so if they have a home to sell, then the program is called the Modern Bridge Loan. So this, again, designed for someone who wants to buy. We're always trying to pre-approve people non-contingent in this market, but sometimes because of income, because they don't have the down payment, because they can't qualify for both payments, they just can't buy non-contingent. So this will alleviate that problem, keep them from having to move twice. So in this case, they get pre-approved with us. And then they get pre-approved through the cash program. That's about 1 to 2 days. On top of the pre-approval, Then they'll go ahead and make a cash offer. The cash buyer program closes with cash on the new house. The buyers can move into the new house. Then you sell the old house. The plan is to have it sold within 90 days. That's the goal. There is a conversation that the listing agent is part of as you're making the offer to make sure, they feel like, it's not a unique house that's going to take twice as long to sell. And then once the old home sells, then we do a purchase loan for them. And the only loan program this does not work for is if the buyer's doing an FHA loan. And that's because of the 90-day flip rules that FHA has. So, but we do have some solutions for those, just not the bridge program if they have a home to sell. So FHA wouldn't be okay with this because this third-party entity is paying cash for the house, and then now the buyers are buying it back from them within that 90-day period. And so FHA doesn't allow that. They consider it a flip, even if it's for the same price, which is what the buyers would be paying. Okay, so then if you just have a buyer who does not have a home to sell, there's actually a couple different variations where, again, like the cash program that we had set up last year, you couldn't do VA, you couldn't do FHA, and conventional was only 20% down. Okay, so this one, their signature program, essentially the buyer then gets pre-approved, gets pre-funded, they write a cash offer, the third-party entity pays cash, the buyer actually closes, the buyer's on the contract, they close. We're originating a loan that's just short-term interest-only financing. And then, they get to move in, and essentially what we're doing at Zenith with this program is a refinance. So it works for FHA. So we're going to refinance, pay off the short-term interest-only financing that they had. And this works great for FHA buyers, conventional loans with at least 5% down payment, and jumbo loans. So that would be, this would be the solution for those buyers. They also have another flavor here called the reserve. So in this case, what we're doing is that the contract is in the power buyer's name. So you have a cash buyer on your hands, they close, and then the buyer moves into the home, and then now we are doing a purchase transaction after they've already closed. So you're done with your part of the transaction, and we're doing a purchase loan for them. So this would work for VA buyers and conventional buyers with as little as a 3% down payment. Once they move in, they're paying a per day lease essentially for the carrying cost. And so, because we can close most purchases in 2 weeks, let's say you go under contract, you pay, they pay cash with this program, you're closing in, 10, 12 days. And then at that point, we're starting our purchase for them to buy it back. And we can do that in a couple of weeks. So generally within a 30-day time frame, the buyer can be in the house and be completely done. Okay. This third option, the flex program, this one's pretty cool because the purchase contract is in the buyer's name. This is almost like an insurance policy, right? So the buyer, the contract will say that they are obtaining financing, but there's an addendum that says that if the loan does not close for any reason, which if we work together, you should know that's not going to happen if I've pre-approved them. But if they do and it doesn't close, then the cash buyer would come in and pay cash. Okay, so great for, again, 3% down VA type buyers that are low down payment and maybe have a hard time getting an offer accepted, even if we, waive loan availability and close in 2 weeks and, the $1,000 a day guarantee, all those things we can do, but if it's a really low down payment loan, sometimes they just have an issue getting an offer accepted. So this is an insurance policy that will say, yes, we are looking to get financing, but we do have cash, we have proof of funds that they would provide, and the seller's protected. They know that if we can't close for some reason, they would step in and close in cash. So program costs. So the Revive program we had last year was like 2.5% to 3%. So, I mean, people did it, but this seems like a really good deal in my book. So for any of the 3 different cash buyer programs, the fee is 1% of the purchase price. And then if they're doing the bridge, it's 1.9% of the new purchase price. And that's just because it goes to, there's more risk because they have a home to sell and there's carrying cost for that. So all of that would be outlined for the client as they're going through the pre-approval process. And here's some of the questions that I've gotten so far. So how long does the process take? So, when we do a full pre-approval, so whatever, people ask me that all the time. I mean, I have clients that give me an application, give me all their documents on day 1, and maybe the same day or the next day, they're fully underwritten and pre-approved. And then we have clients that take 2 weeks to get like 1 pay stub and a bank statement after 2 weeks. And so those take longer. For this company to go out and pay cash for these homes, they do want a fully underwritten pre-approval. So they said, hey, start the process on Monday, maybe a couple days for our pre-approval, a couple days for the cash buyer pre-approval, and by next weekend or by the weekend, you'll be ready to make a cash offer. So this does not work well for someone who just wakes up on Friday, decides they want to buy a house on Friday. They are available on weekends, so there's an email and a phone number. Nights and weekends, they're available. So if you're trying to structure an offer, you want to get all the details, the buyer needs to get, the numbers as far as their carrying costs. They said they always reply within 2 hours. Okay. None of these programs require an appraisal to be done. But if the buyer is concerned about a possible appraisal gap that they're writing into the offer, then they're glad to include an appraisal as part of the transaction. Okay, because remember, the buyer has to eventually either buy the home back or do a refinance if we close with short-term financing. So the value is going to come into play when they go to get their permanent loan. So if the buyer wants to include it, you're doing a big appraisal gap, then the appraisal can be included in the offer, or else it can be waived. If you have a buyer who's doing, 50% down or something like that, we'll run those numbers. And situations like that, the appraisal never really means anything, because even if it underappraises a little bit, nothing really changes about the loan. So, just conversations that we would have as you're making those offers. Max cash offer price, they said a rule of thumb is 2 million. Anything above that is case by case. Just got approval on a client who is able to go to 2.8 million as a cash buyer. Then they're selling their current house. And, I first looked at that, I'm like, wow, they're going to spend, $45,000 in fees on this bridge program, but they're looking in a very specific area, and they've lost 3 houses, and they need to be contingent in order to qualify. And so this was a good solution that they're very happy with. Minimum credit score is 660. Things that are lower than that are, we have to get an exception. And it, typically if like someone is selling a home, their credit score is not great, but they have a ton of equity, that would probably get an exception done. This can be used for primary, vacation, and investment properties. And if their exit home that they're selling is out of state, that works. All they're really looking at, that's why they want to have a conversation if you're doing the bridge loan with the listing agent, because if the home is like a 250-acre farm or something that's just it's going to take a long time to sell, then it's not going to be a good fit for this program. It needs to be competitively priced, and it needs to be kind of an average type house that's gonna have no issues closing. And yeah, so there's a phone number, there's an email, so any questions, there's a whole dedicated team. There's like 5 people that work on this team that, crunch all the numbers, run everything. So yeah, that's about it. Any questions?
I have a question.
Yeah, that would be funny if you're like, you were muted.
Oh, happens to me all the time, so I'm glad I avoided that. What in that first scenario that you pitched,